did you notice what happened on March 15th, 2023? Most Americans didn't, but on that day, Saudi Arabia, the world's oil kingpin, announced something that shattered nearly 50 years of financial rules. They said they would start accepting Chinese yuan for oil, not the all-powerful dollar, the yuan. This one decision cracked the petrodollar monopoly, a system that had stood strong since 19... But this wasn't just some trade deal. It was stage 6 of an 8-phase pattern. A pattern that has, without fail, brought down every dominant reserve currency in history. The pattern is clear and unforgiving. Here's the key thing most people miss. Reserve currency dominance is never forever. It's a predictable cycle, lasting about 80 to 110 years. A currency rises. It dominates global trade. It stretches itself too thin. It sees new rivals emerge. Confidence in it starts to crumble. Other options gain ground. A crisis speeds up its decline. And finally, it gets replaced. We've seen this exact story play out 3 times over the last 500 years. And every single time, the top nation refused to believe its currency could fall. They thought they were special, that their system was invincible. History proved them tragically wrong. Today, the dollar is sitting squarely in stage 6. Alternative systems are being adopted faster and faster. The petrodollar system is breaking apart. The BRICS nations are building their own financial highways. Based on what history shows us, we're looking at maybe 10 to 15 years before the dollar completely loses its reserve status. This is the biggest economic shift of our lives. And yet, it's happening mostly in the dark, away from public view. I'm going to show you the exact 8-stage framework that destroyed 3 previous reserve currencies. I'll pinpoint exactly where the dollar is in that pattern, expose the specific forces speeding up its collapse, explain why the death of the petrodollar is fundamentally different from past shifts, and reveal who stands to make a fortune while others face financial ruin. This isn't just a theory, this is pattern recognition, and the pattern is screaming one undeniable truth. The dollar's time at the top is ending. Before we dive into the collapse pattern, you need to understand what a reserve currency actually is. It's the currency that countries all over the world save up as their main foreign reserve. Central banks hold these reserves to trade internationally, pay off debts, and keep their own currencies stable. When a currency gets this special status, it gives the country that issues it for incredible advantages. First, there's structural demand. Every country needs your currency for global trade, which creates constant demand for it, no matter how your economy is doing. Second, this is a fancy word for printing paper, money, and trading it for real goods and services from other countries. It's like getting something for almost nothing. Third, you get to borrow money cheaply. Because everyone wants your currency, they also want to buy your government bonds. This keeps your interest rates artificially low. And fourth, you can export your inflation. When you print a ton of money, the resulting inflation doesn't just stay at home. It spreads across the globe because everyone holds your currency. These advantages make being the reserve currency the ultimate economic superpower. But losing it is a catastrophe. When the world no longer needs your currency for trade, demand disappears. Your government can't borrow cheaply anymore. Printing money leads to immediate, runaway inflation at home. Your standard of living, which has been propped up by decades of seigniorage, comes crashing back down to earth. This happened to Portugal, the Netherlands, and Great Britain. And now, it's happening to America. Let me show you the 8-stage pattern. Stage 1. Dominance is established. A nation becomes the top dog through economic and military might. Think of Portugal in the 1500s. They controlled the spice trade with their powerful navy and strategic ports. The Portuguese real became the go-to currency for trade in the Indian Ocean. Then, in the 1600s, the Dutch Republic built the world's most advanced financial system with the Amsterdam Stock Exchange and the Bank of Amsterdam. After defeating Napoleon in 1815, Great Britain controlled a quarter of the world's land and people. And after World War II, America had half of the world's GDP and created the Bretton Woods system, which officially tied the dollar to gold. Stage 2. Peak power and at the height of its power, the ruling nation stretches itself too far. Portugal, with a population of only 1 million people, tried to maintain a military presence in dozens of ports from Mozambique all the way to By 1560, paying off its debt was eating up 60% of the king's income. The Dutch fought 3 wars, with England and several others, with France. By 1700, they were spending more on defense than they were making from trade. Britain fought the Boer War and maintained the world's largest navy, which was incredibly expensive. By 1914, Britain actually owed money to America. For the U.S., the Vietnam War forced President Nixon to break the dollar's link to gold in 19... Military spending just kept climbing through the Cold War, the Gulf Wars, Iraq, and Afghanistan. By 2008, U.S. debt hit $10 trillion. The currency seemed strong on the surface due to habit, but the foundation is cracking. Stage 3. Competitors emerge and build their own systems. Other nations see the dominant power abusing its privileges and start building alternatives. They aren't trying to replace the reserve currency right away, but to protect themselves. Spain, England, and the Dutch created their own trading companies to challenge Portugal. The English and Dutch East India companies had better ships, better financing, and better trade networks. By 1620, the Dutch had taken over most of the spice trade. Great Britain created the Bank of England in 1694 to compete with Amsterdam's financial power. After World War I, America's economy became bigger than Britain's, and the new Federal Reserve offered a different financial infrastructure. And after the 2008 financial crisis, China created CIPs as an alternative to the SWIFT payment system. Russia created its own version called S. The BRICS nations started talking about a common currency. These systems weren't designed to kill the dollar overnight. They were built as defensive moves, as hedges against risk. For the first 3 stages of a currency's life cycle. Now, we're diving into the final 5 stages, where things get really intense. This is where we see the dominant currency's power unravel, and it's happening to the US dollar right now. Let's jump into stage 4. Weaponization. This is when the dominant power, feeling its position challenged, starts using its currency as a weapon. We're talking sanctions, asset freezes, and cutting countries off from payment systems. Historically, this always backfires. When Portugal seized Dutch ships, the Dutch simply built their own, better port network. When Britain blockaded the Dutch, merchants fled to London. And when Britain froze German assets during World War I, neutral countries got spooked and started dumping the pound. America's weaponization of the dollar ramped up in 2 key moments. First, in 2014, after the annexation of Crimea, the US hit Russia with sanctions. In response, Russia systematically sold off its dollar reserves, going from $130 billion down to almost zero by 2020. But the real game changer was in 2022, after the invasion of Ukraine. The US froze $300 billion of Russia's foreign reserves and kicked them out of the SWIFT payment system. This was the financial nuclear option, and it sent a shockwave through the entire world. The message was clear. Your dollar reserves are only yours, as long as the US government says they are. The result? A global rush. This leads directly to stage 5. Confidence cracks, and the reserve share begins to fall. Once countries see how vulnerable they are, they actively start reducing their holdings of the dominant currency. This stage can last for a decade or more, but once it starts, it's irreversible. Looking back, we see this pattern repeat. The Portuguese real fell from 60% of Asian trade in 1582, less than 20% by 1640. The Dutch guilder went from 40% of European reserves in 1782, under 10% by 1815. The British pound dropped from a 60% share in 1913 to just 30%. By 1940, now, look at the dollar. Its share of global reserves peaked at 71% back in As of 2024, it's down to 58%. That's a 13-point drop in 25 years. And it's accelerating. In just the last 2 years, we've seen a 4 percentage point drop. If this pace continues, the dollar will fall below 50% of global reserves before 2030. That brings us to stage 6, the danger zone. Alternatives gain critical mass, and the network effects flip. This is the tipping point. It's when using the alternative currencies becomes easier and more beneficial than using the dominant one. Think of it like a social network. People go where their friends are. Merchants start preferring the alternative currency because their customers do. By 1640, the Dutch and English trade networks were so vast that merchants preferred the guilder because it gave them access to more ports and better financing than the Portuguese real. After Napoleon's defeat, London's financial markets were so much larger and more liquid than Amsterdam's that everyone switched to the pound. We are entering stage 6 right now. In March of 2023, Saudi Arabia agreed to sell oil to China in yuan, cracking the foundation of the petrodollar system that has been in place for 50 years. China's alternative to SWIFT, called CIPS, processed over $27 trillion in transactions in 2023, more than doubling its volume from just 2 years prior. The BRICS nations have announced plans for their own common currency, likely backed by gold. But here's the most stunning statistic. In 2020, 73% of all international trade was invoiced in dollars. By 2024, that number had plummeted to 58%. This is the network effect flipping in real time. Stage 7 is where it all comes crashing down. Crisis acceleration and panic diversification. Once the network effect flips, any major crisis, a war, a financial meltdown, a major policy mistake can trigger a panic. Countries scramble to dump their reserves of the falling currency, causing it to crash. The War of Spanish Succession finished off Portuguese trade. Napoleon's continental system destroyed what was left of Dutch dominance. For Britain, the crisis was World War II. By 1945, the country was bankrupt, owing 3 times its GDP. The pound was devalued by 30% just a few years later. So what's the crisis for the dollar? The triggers are all around us. It could be the official launch of a BRICS currency. It could be a U.S. debt crisis, with federal debt soaring past $36 trillion. It could be military overextension, with the U.S. stretched thin across multiple conflicts. Or it could be a banking crisis sparked by defaults in commercial real estate. Any one of these could trigger stage 7. Countries would panic sell their U.S. treasuries, and the dollar could fall by 30, 40, even 50% in a matter of months. This would force the U.S. into an impossible choice. Print money and trigger hyperinflation, or raise interest rates and trigger a deep depression. Finally, we arrive at stage 8. Replacement. A new dominant currency emerges. This doesn't happen overnight, but usually takes 5 to 10 years after the crisis. The Dutch guilder replaced the Portuguese real by 1680. The British pound took over from the guilder by 1815, and the US dollar was officially crowned at Bretton Woods in 1944, though the full transition took another 15 years. So, what replaces the dollar? There are a few possibilities. The first is the Chinese yuan, especially if its economy keeps growing and its CIPS payment system becomes the new global standard. But the yuan has major hurdles, like capital controls and a lack of trust in its government. The second possibility is a multipolar system, where the dollar, euro, and yuan all act as major regional reserve currencies. The third, and perhaps most intriguing, is a return to a neutral asset like gold, possibly in the form of a gold-backed BRICS currency. Ultimately, the winner will be whichever system offers the most stability, liquidity, and trust. Now, you might be thinking, these historical transitions took decades. We've plenty of time. But I'm here to tell you why this time is different, and why the dollar's transition will be much faster. Previous currency shifts took 30 to 50 years from peak to replacement. I believe the dollar's entire journey, from its peak in 2000, could be complete by the 2030 to 2050 timeframe. First, technology changes everything. In 1914, moving gold reserves across the Atlantic took weeks by ship. Today, you can move billions of dollars across the globe in seconds. The dollarization can happen exponentially faster than the sterlingization ever could. Second, the alternatives are already here. When the British pound was declining in the 1940s, the US dollar was the only viable replacement. Today, countries have a menu of options. They can switch to the yuan, the euro, hold physical gold, use a new BRICS currency, or even explore cryptocurrencies. They can diversify their holdings immediately. Third, the petrodollar itself was an artificial construct. It wasn't purely based on economic might, but on a political deal with Saudi Arabia to price oil in dollars. That deal is now fraying, and the foundation is crumbling. And finally, the United States is more indebted than any previous dominant power at its peak. With a national debt of $36 trillion, over 120% of our GDP, our situation is precarious. When the world no longer needs dollars to buy oil or trade, and stops using them as their primary reserve, who's going to buy all of our debt? We won't be able to finance our deficits anymore. The stages are clear. The historical parallels are undeniable, and the data shows an accelerating trend. We are living through one of the most significant geopolitical and economic shifts in modern history. Fifth, this transition is different because it's global. Previous currency shifts were mostly regional, but globalization means this one is happening everywhere at once, making it faster and more chaotic. So, where are we on the timeline? Let's break it down. Based on the historical pattern, from 2000 to 2008, we saw peak dollar dominance. It held a 71% share of global reserves. Then, from 2008 to 2014, the financial crisis hit. This damaged confidence in the dollar, and at the same time, China began building CIPs, its alternative to the SWIFT payment system. The period from 2014 to 2022 saw things accelerate. The sanctions on Russia and the massive money printing during the COVID pandemic seriously increased concern about relying on the dollar. Then, from 2022 to 2023, we hit a watershed moment. Russia was cut off from SWIFT, and its reserves were frozen. This was a huge wake-up call for the rest of the world. By March of 2023, Saudi Arabia agreed to accept the Chinese yuan for oil, officially breaking the petrodollar monopoly. Right now, from 2023 to 2025, we're seeing the dollar's reserve share fall from 60 to 58%. Central banks are buying gold at a record pace, over 1,000 tons annually. This is where we are, moving from stage 5 into stage 6 of the reserve currency collapse pattern. Looking ahead, between 2025 and 2030, We expect the BRICS nations to launch their own currency. The dollar's reserve share is projected to fall below 50%. This is a critical tipping point. Once it dips below 50%, network effects flip, and the move away from the dollar will gain unstoppable momentum. We'll have reached stage 6, critical mass. From 2030 to 2035, a major crisis is likely to trigger panic selling of the dollar, causing it to crash by 30 to 50% in value. This is stage 7, crisis acceleration. Finally, from 2035 to 2050, a new system will emerge. This could be a world dominated by the UN, a multipolar system with several major currencies, or perhaps a new gold-backed BRICS currency. This is stage 8, the replacement. This entire timeline is based on historical patterns. While the exact dates might shift, the direction is locked in. The dollar's decline is happening, and it's picking up speed. Now, let's talk about the most important part. Who wins and who loses in this massive shift? The biggest winners will be gold holders. During the decline of the British pound, gold's value shot up 24 times. We can expect a similar massive gain. The BRICS nations also win big. They'll finally gain economic independence from a financial system controlled by the United States. Commodity exporters, countries that sell natural resources, will win because they'll have increased leverage and pricing power. And nations with low debt, like Switzerland and Norway, will become safe havens for capital. So, who loses? America loses the most. For the past 50 years, the entire U.S. economic model has been based on a simple formula. Print dollars to buy real goods and services from the rest of the world. When that privilege ends, American living standards are projected to fall by 20 to 30% over a 10 to 15-year period. It will be a painful adjustment. Savers holding dollars and investors in U.S. bonds will also lose. They'll see their purchasing power wiped out by a 30 to 50% devaluation. Countries with large amounts of dollar-denominated debt will get squeezed. Their debt burden will become much harder to manage. Wall Street and the big banks will lose their dominance as financial transactions shift to other centers like Shanghai, Frankfurt, or Dubai. And finally, the U.S. government itself loses. Without the world's demand for dollars, it loses the ability to easily fund its massive deficits through printing money. The wealth transfer from those holding dollar assets to those holding non-dollar assets, like gold and other commodities, will be the largest in history. Let me end with this crucial point. This 8-stage reserve currency collapse pattern isn't theoretical. It has already destroyed 3 major world currencies in the last 500 years. The Portuguese real, the Dutch guilder, and the British pound. Each and every time, the dominant power believed its currency was different. They thought it was too important, too big to fail. And each time they were wrong. Today, the US dollar is in stage 6 of that 8-stage pattern. Alternatives are being built, and they are rapidly gaining critical mass. The petrodollar system, the bedrock of dollar dominance, established in 1974, was officially broken in 2023. When Saudi Arabia, the world's largest oil exporter, starts selling its oil in a currency other than the dollar, it sends a powerful signal to every other country on the planet. You do want to need dollars anymore. Once that signal is sent, the downward spiral accelerates. The timeline suggests we have about 10 to 15 years before the dollar loses its status as the world's primary reserve currency. It won't be eliminated, but it will no longer be dominant. We are heading into a multipolar currency world. For America, the 50-year free lunch is coming to an end. The $36 trillion national debt becomes practically unpayable. Living standards will fall. This is the unavoidable cost of losing reserve currency status. Britain experienced this painful decline from 1940 to 1970. America is set to experience its own version from roughly 2025 to 2050. The pattern is clear. The stages are defined. We are in stage 6. The collapse is accelerating, and there's nothing that can stop it. Because reserve currency dominance was never meant to be permanent. It's a cycle, and every cycle has an end. The Portuguese real collapsed. The Dutch guilder collapsed. The British pound collapsed. And now, the US dollar is on the same path. It won't happen tomorrow, but it is happening, inevitably, stage by stage, crisis by crisis, until the replacement arrives. History doesn't repeat itself, but it certainly rhymes. And right now, the rhythm sounds a lot like Portugal in 1640, the Netherlands in 1800, and Britain in 1945. The dollar's dominance is ending. The timeline is 10 to 15 years. You need to position yourself accordingly. Thanks for watching. If you found this analysis valuable, make sure to like, subscribe, and hit the bell icon so you don't miss our future updates. See you next time.